What's up, guys? It's May 27th, 2025. Looks like we had a trend day. It's a rare day to have a trend day. Trend days are rare because most of the time the market's ranging. What causes a trend is the constant tension between trap bears and bulls having, in this case, bulls having to chase the markets. So bears are going to short right here. Look, there's a gap that lines up. Bears short right here. There's a gap. Gaps happen at support and resistance. And since this is a bull trend, these gaps are being formed at what could have been resistance. So there could have been resistance above bar 1, could have been resistance here, could have been resistance here. There's no gap, so the trend started to go a little more sideways, but then it broke out again. Right around this swing, that's resistance, breaks out. Another swing creates a gap. This gap is the biggest gap since down here, but the market still, this was actually, hold on, let's see where this tested. So bears couldn't even make it back down here, even though this was the biggest gap. That's kind of climactic price action, but they still trended, bulls still trended higher. So the tension between bears getting trapped and bulls chasing the market is what causes a trend. It's a rare day to have a trend day. Weekly chart, daily chart. Weekly chart, we're on all charts. The higher time frames are on the third leg, so we can say leg 1, pull back leg 2, pull back leg 3. Bad follow through on the third leg, sells off, but this bear bar doesn't break this bull bar's low. So there's still a small bull gap right around here. And then it rallies, bounces off the EMA. Bulls are ready to buy the average price. This is the weekly chart with the daily EMA. So this EMA is the same as this EMA. The 3 legs I just counted were leg 1, pull back leg 2, pull back leg 3. What's interesting about this leg count is this leg 3, it's right around this swing. So this breakout, this last leg, the third leg, could be a leg count reset. So leg 1, pull back leg 2, pull back leg 3. Again, leg 3, bad follow through. And then bears get 3 legs down. Leg 1, pull back leg 2, pull back leg 3. That's a wedge bottom in a bull regime. We're above the EMA. Lots of bull bars above the EMA. First touch of the EMA. And it rallied today. Now, if we're entering a trading range, today was nothing more than a deep pullback for leg 1, pull back leg 2. But we won't know until the next few bars print. I think this bar is strong to get second leg. But I think bears right here are strong to get second leg. We're in a bull regime, and this bar closed on its high. So bulls are going to want to see a measured move from this bar if they buy the close. I was doing some back testing. This is 1R. That's 1.5R. I was doing some back testing for 1.5R. So the bull spike starts down here, actually. So bulls want to reach 61.31. I want to look at the 45-minute chart. I'm just taking a quick peek at. Eventually, later on this year, I'm going to start swinging the 45-minute chart second legs. So I just want to see what today's rally looked like. And here's those 3 legs down. Leg 1, pull back. Leg 2, pull back. Leg 3. Big gap down. Bad follow through above the EMA. Bulls get 3 legs higher. Leg 1, pull back. Leg 2, pull back. Leg 3. Go sideways, but this ends up being a higher low. And then a big gap up with follow through. Here's the gap up. Bulls want to get 1R of this range, and they hit that. So they hit that 1R and kept going. Now they want to get 1R of this entire move. This is not the extended hour session, but yeah, they're aiming for right around here. And that puts us right around here where the bears broke down earlier this year or last year. Yeah, around February. So that's interesting. Big gap up, bar 1, bear bar. I think the bears that see this at their big gap up are hoping for a reversal. Bar 1 closing on it slow. Bears are looking for second leg down. And they do get that second leg down within the bar 2 tail. So leg 1, pull back, leg 2, and then it rallies. Bar 3, bull bar closing on its high, but not far past. It's closing above bar 2, that's true. But it's still within the 50% of bar 1's range. So at this point, it's a little harder to tell the trend is going to take place because this is all the information we have. We know there's a lot of momentum. We know bulls are breaking out of the higher time frame EMA. But the information we have can be just based off this gap. Is that gap up, bad follow through? Let's take a look at the overnight session. So this is bar 1. this is today's bar 1 right here, 104. 104, 103, 104 is testing the breakout from the overnight session. Started the rally right here. The pullback took very long. So what I mean by that is from here to here, it took a long time. And look, it's not a strong bear trend. Look how deep these pullbacks are. Actually, okay, there we go. So the pullback started at 1250. And it took them almost 3 hours. It took bears almost 3 hours to break below the EMA. And as soon as they did that, it rallied back above that. And then they get a second leg down. Then a big bar right here at around 5:30 a.m. or 5:20 a.m. PST. Then we get some big bear bars that it does look like the market's about to collapse. But then we see bar 104, which is bar 2 today, testing the breakout point from this rally. Bar 3 is high. And then that starts the rally. So there's some more context for today's rally. This is actually testing the overnight session that gapped up. I think this is testing the, how do I say this? So bar 2's low is testing this entire rally. But the gap up actually started from 81 yesterday. I just want to see where the gap up starts. Okay. Oh, I see. I forgot Sunday's price action. There we go. I forgot today is Tuesday. That's what I was a little confused right there. So this is Sunday's price action rally. We went sideways for most of the time. And then we went into yesterday's overnight price action and then rallied. Okay, there we go. Anyways, bar 4, bull bar closing around its midpoint. It has a tail. Bar 4 is right here. Bar 5 sells off and then rallies. So now we have a trend line break. So if this is one leg, we have a leg 1, pullback, leg 2, pullback, leg 3, breaking out of the range. So there's a measured move there. And look where the market starts to go sideways when that measured move is met. So we break out of the range with bar 7. Could say leg count resets. Bulls make a gap at resistance. Gaps happen at support and resistance, so keep that. Just remember that. That's how we can tell if the market's trending. Earlier in the Discord, I said, man, something's weird about this bull trend day because it started out with bar 1. I want to say it's going to go into a trading range, but I also said I have to follow the gaps, and then we have so many gaps open, so it's trending until they close, and gaps never really close up until right around here. So it was a bull trend day, and without having to act. My mind wanted to look for reversals right around here. I saw climactic price action. Then I thought this was climactic and we're going to go sideways down here. But I kept telling myself if the gaps are open, it's a trend day. So that's how I stay not biased. You know, if gaps are open, it's trending. If gaps are closing, it's trading range. Bar 8, follow through above the breakout of bar 7 and bar 1. Bar 9, first pullback after 1, 2, 3, 4, 5, 6, 7, 8 bars. So bar 9 is a first reversal that these typically fail. Big breakout, bar 10. Now we have another gap with bar 11. Now we have 2 gaps within the first hour. So that's trending behavior. Bar 12, bad follow through. It rallies, trapping the bulls that have stop orders above 11. They get filled on 12 and they're in a small losing position, but not by much, just a point or two. Then we see 13. Bull bar closing above its midpoint. 15 breaks another trend line. So now we're counting trend line breaks. Leg 1, pullback. Leg 2, pullback. Leg 3. You can count legs by trend line breaks. So bar 5 is breaking this trend line here. Bar 14 is breaking 13's trend line. Between counting trend lines and opposite bars, like bar 9's an opposite bar, so that's start to leg 2, leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4, and so on. You just have to be cognizant of both. You can't say this is better than the other. In a small pullback trend, today's a small pullback trend, the leg count goes on forever, so that's the exception. The one exception to their legs is small pullback trends. And these days don't happen often, so you're not going to be sitting there guessing too much. Like, we got this day out the way, now we know Maybe if we have a gap up, we have a tradable leg within the first hour, and then we go sideways for the rest of the day tomorrow. But we'll see. I don't want to predict. We'll just react. Bar, so we're in the third leg. Bar 14 breaks the trend line. 15, another bull bar. 6, it's a trading range bar, has more tail. Bar 17, big tail. Still has a bull body. So again, bears only have bar 1, 9, and you could argue 14 because it didn't close, or 12 and 14 because it didn't close bullish, but it also didn't close bearish. So it's more neutral than bearish or bullish. Bar 18, and again, was this the third bear bar now? 1, 2, 3. Bulls buy that right away. 19, and then we have another bear bar. Bar 20. Bar 21 becomes the high 2. 19 is the high 1. Bar 21 is the high 2. Follow through with 20. Excuse me. Bar 19 is the high 1. Bar 21 is the high 2. Follow through with bar 22. Now we have another trend line break on 23. As soon as the market sells off, bulls buy it, testing the low of this range right around here. Bar 24, bull bar closing on its high. 25, bear bar. So now we have 4 or 5 bear bars. 1, 2, 3, 4, 5. By bar 25, we only have 5 bear bars. So you guys know that you guys can just start counting like that's not a lot of bearish pressure if you're looking to short. We're in a bull regime. It's either get long or sit on your hands. I would not short this market today. Bar 26, not inside. Bar 25 is an inside bar. Bar 26 tries to break out, but then closes bullish. Rally sells off, and rallies. Trading range behavior. 27, another doji closing on its high. More trading range than trending behavior. A trend bar is a bar like 31. A trading range bar is a bar like 27. 28, bull bar closing. Excuse me, bear bar closing around its midpoint. Small body, small range. Bar 29 breaks, starts to break out of this wedge top. Excuse me, leg 1, pull back leg 2, pull back leg 3, and we start to get, so that's a trading range. It's creeping up, bull pressure stacking, breakout 31. Creates a gap right here, but the problem with this gap is it starts with a bear bar and ends with a bear bar. So it's not the strongest gap. We have some other gaps, but I was just pointing this one out. Then we go sideways for a few more bars. See, new high, sideways, new high, sideways, new high, sideways. So keep that in mind. When we make new highs, are we going sideways? Or when we make new highs, is it reversing down into the EMA? In this situation, every new high went sideways. So another reason to be bullish is that the bullish pressure is stacking up. 37 is the inside bar. We're definitely well within the third leg. Then we see a big bar 38. Creates a really big bar with really big gap with 39. This is one of the bigger gaps since the opening. This is the biggest gap within the rally. Usually big gaps in third legs is climactic price action, and we see that bad follow through 39. Bulls got filled actually trying to buy the hot 38 high. Stop order bulls got filled on 39. It sells off. They're underwater 38. 38 shot to get a second leg down, and it does with 42. 42 is the minimum. It's just a leg in that direction. So the minimum for a second leg would be at least one tick beyond bar 40, but they don't even get that. So bears can't even make a one tick below the swing right here after climactic price action. Now the market's trying to go sideways. Bulls had climactic price action. We go more sideways here into a rally. So trading ranges have the last leg in the trend is the first leg in the trading range. We don't actually know until the opposite side gets a channel. So here's the bear channel. But what I'm trying to say is second leg traps are common in trading ranges. And if this is climactic, we know we're well past the third leg. Could argue like 1, pull back like 2, pull back like 3. There's many ways to count that. If you want to reset the count from right here, like 1, pull back like 2, pull back like 3, pull back like 4. What's important is that we know that the probabilities for trend continuation are starting to shift. Today is a rare day, so it kept going. But look at the second leg trap right here. Like 1, pull back like 2. Bar 57 traded, bar 58 traded 1 tick above 57 and then sold off. And we had a very weak bear channel today for the rest of the day. How many legs? Leg 1, pull back. Leg 2, pull back. Leg 3, pull back. Leg 4. The leg 4, bar 76, doesn't break below 73 swing. And then bulls see that as a trading range low. 77, they buy it. Bulls buy 70, the high of 70, bulls buy the low of 73. So we see that sell off in the rally. 77, bulls buy the high. This is the first set of gap bars below the EMA after over, 62 bars above the EMA. So generally the first gap bar is a better buy than a reversal. You can see that play out here. Leg 1, pull back leg 2. Big bar 78. There's also a gap here. Lots of, most of them, let's see if 2R is met. Lots of bullish pressure today. Let's see if 3R is met. No, 3R is not met. So we have that, and then we have, you could scalp the breakout 7. Yeah, 6. So you see 7, like you buy the close for a scalp, that objective's met. Then you see another 3 bars here, the high of 12 to the low of, you could say 9 or 10. The spike starts on 9, so put it below the pullback bar 14, and 1R is met there. Then we have a trading range that I mentioned earlier. Bullet in a box analogy. If you shoot a bullet into a box, momentum's going to bounce around and usually get spit out the same way if it's under 20 bars. And then look, here's the bullet, here's the box, momentum's creeping up, boom, breaks out 36, 37, 38, 39. Looking for 1R of 38 is hard. It's hard because it's climactic price action, but 1R was met. So if this is the trading range, if 38 is the trading range, 1R is met. If you want to go for a leg count, you could see this entire thing as a leg, and this is the pullback. I don't actually, I'm not good. I was going to do this, but I don't like that because this is more of a trading range than a leg. It's too late to look for a leg 2 for bar 38 all the way over here. The leg 2 for 38, for 37, 38. So leg 1, pullback, leg 2 happens right around there. So right around here. And that's met. Then we have these 4 bars, right? 1, 2, 3, 4. Put it below the pullback, 56. And look, it fails. This is the first measured move that failed for the bulls. So now you could argue that we're going sideways to down instead of up. But then 77, what is that, 75, 76, trades right around the high of the gap, the biggest gap, 37. They actually don't even make it back to the 35 high. Wait, excuse me, 37 high. Ends up being a rally. So bull pressure was really high today. I mean, there's many gaps. As long as gaps stay open, that's trending behavior. If gaps get closed, that's trading range behavior. That's generally how I read the context for the markets, along with leg count and market cycle. Guys, if you learned something, share the show. Don't be a hoe. I'll talk to you guys tomorrow. I didn't get to place any trades today. I might not trade tomorrow. I've been kind of hounding away at this side. What turned out to be a side project is now pretty much my main project. I'm gonna be working on chapter 6 for the rest of today, and then get cracking on this code. So I hope you guys have a good one. I'll talk to you guys tomorrow. If you learned something, share the show. Don't be a hoe, and I'll talk to you guys later. Thank you for your time. Bye.